Of record-breaking hyperinflation, Zimbabwe's economy has now swung in the complete opposite direction. For 3 months, it's experienced deflation or falling prices. It may seem like the better option, but a small amount of inflation is healthy because it means there's demand for goods and services. In Zimbabwe, factories are closing down, cash-strapped Zimbabweans are not spending, and the stock market has plunged by 15% this year. There are also renewed concerns around investment, with conflicting reports about Robert Mugabe's government on empowerment. Since 2008, a law has compelled mines and banks to cede at least 51% of shares to locals. Yesterday, the Finance Minister, Patrick Chinamasa, was quoted as saying that government will demand 100% control of its minerals and land. But a minister said today that Zimbabwe's cabinet has ordered that the law in fact be amended to be friendlier to investors. Well, joining me now is Nathaniel Nika, Associate Director at the Abraj Group. Great to have you with us, Nathaniel.
Thank you, Francis.
Okay, so at some point I saw the IMF estimated inflation, I think 500 billion%, or it was ridiculous at one point. How do we land up now in the opposite situation?
Well, I think it's quite an interesting story because you recall after the dollarization, as it's called, came in around 2009. Initially, we had a dip in inflation. I think we had minus 7.7% right at the moment that US dollar was introduced and the multi-currency regime came in. But then what happened after that is then the economy started growing, and everyone kind of forgot that there was this madness which had kind of developed around the 2008 era where we had assets being priced way above, their regional comparatives or at least their fair value. I mean, if you look at things such as property, for example, you would find a property will end up giving a rental yield of 1% at that moment because the prices were priced so high because people were trying to do the whole conversion from the Zim dollar to the US dollar and try to arbitrage the whole system. So we created, first of all, a system where we had very inflated prices. And now that the economy has been using the US dollar for about 4 or 5 years now, what's happening is that the arbitrage has to eventually fall away. So it means the prices of things in Zimbabwe, first of all, have to compare with the regional average. So you can't have a can of beer, for example, going for, previously it would go, a six-pack would go for something like 20 US dollars, while it's going for 25 Rand here. That arbitrage has to close down. So first of all, those prices are moderating and they have to come, to the norm. So that moderation process, first of all, is the first thing that has kicked this whole deflation process. But then when you add to that, what has further happened is that as the US dollar economy started picking up around 2012 to 2013, just before the elections, a lot of companies built capacity and some arsenal in terms of cash, and they started retrenching because during the hyperinflation regime, they couldn't retrench because they didn't have money. So they kind of had these employees who would kind of have, soft working hours, work for 3 hours and so forth. So now they've managed to develop that money to build up that cash pile to actually retrench, and we had serious retrenchment over the last 2 to 3 years. So now a lot of people have been retrenched. Consumer spending is now dropped, and it starts the whole deflation spiral because we've got the people unable to spend because they're not getting any income because they're unemployed, which then lowers the aggregate demand in the economy. But then the third point which compounds this whole issue is the fact that, South Africa is Zimbabwe's largest trading partner. So Zimbabwe using the US dollar and South Africa using the rand has tanked really quite significantly over the last year. So what has happened is something that was going for $1 US last year, somebody would have purchased the item in South Africa, let's say for 8 Rand. Now they're going to have to purchase the thing for 10 Rand using the same dollar. So that means that their companies are passing.
But aren't they using rands as well? Why do they have to do a conversion?
No, I mean, it's a multi-currency regime, but what has happened is that the US dollar is the dominant currency. That's what's used by most businesses. You can go with the rand, but you'll be probably squeezed on things such as exchange rate spreads. So you'll find you get 10-15% spread on currency. So everyone has just sort of resorted to using the US dollar. So there's this imported deflation, if you want to call it, from South Africa, where things are, are cheaper in South Africa technically because of the use of the US dollar. Hence, we started seeing the spiral.
It sounds incredible. Will there be a leveling off? Do you think you spoke about this close, but there are those additional factors, or could this be a spiral? I mean, I think Japan has been battling deflation for about 15 years.
Indeed, the danger with deflation is that it can form a spiral which is just as bad as hyperinflation, but it's just the pain is the other way around, because what happens is consumers hold back spending because you know the things are going to be cheaper, so you don't spend anything, and consumption declines, then companies start closing, they retrench more people, and then just feeds itself. But what's happening is that at least if the price correction, the price arbitrage process is done, and it's now a case of the rand stabilizing, and we just have a situation of where you need to put some inflation into the economy, but that can only come through investment, then pushing, coming into the country and then pushing the economy back up. But as it stands, we don't have much investment happening there because there's a lot of policies that are kind of scaring away investors, and a lot of investors are kind of shying away and holding back. As you said, the finance minister has given a position where they say they want to actually acquire 100% shareholding in strategic sectors, while last week the news was that they actually wanted to reduce that shareholding in strategic sectors. So the result, the opinion is not really clear exactly what's the way forward. So as a foreign investor, people tend to just hold their money back.
Do you know what sort of activity there is? Because I've heard a lot of South African businesses are there active, some just waiting for new opportunities to arrive. Tiger Brands, Pick n Pay, there, of course, Impala, Platinum. Do you think they're right now worried or waiting to see?
I'm sure they're quite anxious. I mean, if you have, say, companies like Pick n Pay that have gone into TM supermarkets and the like, and are looking at expanding in that market, they're quite anxious because they also don't know. But the beauty about Zimbabwe is that it's quite an advanced economy in its own right, and it's quite easy to turn around if slight things are tweaked in that economy. So you don't want to miss that boat when it actually takes off. So some have decided to take a bit of risk, put a foot in it. Maybe you don't go full on investing and, you go all your cash. You kind of try to share the risk with locals and scan the environment. I mean, a year ago at this time, we totally thought the banks would be totally indigenous and they'll be all gone. But look, it's a different situation right now. So a lot of South African companies that are in there, the Tiger Brands, the Pick n Pay, they're doing it cautiously. You can tell they're doing it cautiously, but they don't want to miss out in that market. I mean, it's got proximity to South Africa, and there's so many advantages of doing business.
So tell me more about those tweaks. What can be done?
Well, it really comes back to policy and politics. The indigenization policy, whereas it's got decent intents, the way to be implemented is obviously going to affect how investors do business going forward. And whereas, something like indigenization might seem, say, quite mean at the start, I think investors are more keen on consistent policy rather than randomly changing policy. So, a country like Botswana, for example, you have to do business with Botswana and the like, you have to go through the government vehicles to go and do business there. So there is some sovereign wealth fund / indigenization approach, if you want to think of it that way. So, but what's important is the consistency. You don't want one day to have the policy saying we're going to take 100% and the next day say we're taking nothing. Then some other guys get some dispensation, some don't, because then how are you going to evaluate the risk and reward relationship in that economy?
Unfortunately, we're out of time. Thank you. Great insight. Nathaniel Nika, Associate Director at Abraj Group. Now, this could affect